No long intro. Class 3 milk. And this is a Megatrade idea. And yes, I did take this trade. I am in this trade. About 2 days ago, I went long in this asset class. Around $19.45, I got my fill. I bought one contract and I'm risking about $2,000 on this specific trade. Now, let's actually take a look. This is a mega trade, and this is what I'm aiming for. My decision for taking this trade was based on mainly 4 process-based decisions. And one of the first frameworks, as you guys know, was the seasonal tendency, which is personally one of my favorites. And when it comes to trading commodities, assets that actually have supply and demand factors because they're actually tangible, I really like using seasonal tendencies. And the other one is the commitment of traders report. Now, this one's a really good one. I specifically track the non-commercials. I find those to work best for me personally. I'm not sure what you guys personally use, but non-commercials. And I was originally taught this by Kevin from White Oak University. Kevin is a long life mentor of mine. He's the one that originally introduced me to the commitment of traders report. And shortly after that, that's when I found out about ICT. And I could tell these two gentlemen were probably the best teachers I could possibly find. And I've stuck to them. They're the only traders I learned from. They're the only traders I follow on my 10 follower Twitter account just to keep track of what they're doing. And I've learned a lot from these guys, and I still do. I'll still go on Kevin's live if he goes live on YouTube every once in a while if I have the chance. And another one is open interest. Now, this one's a really big one, specifically in this trade. And the last one is the premium in carrying charge markets. ICT did a video on this, and I talked about this in more depth in my last video regarding sugar number 11 Megatrade. So, not exactly including this in this mind map, but we did talk about this. But the main thing in this trade was the open interest. It really tipped my decision because of it. So before we start, let's actually see what open interest is. ICT says, if prices are in a downtrend and open interest is falling, this is the bullish sign. Smart money, the shorts, are covering or liquidating profitable shorts. They will be replaced by new shorts, not as strong as they were, but the declining open interest indicates the squeezed longs are bailing. They will be replaced by new longs who were not as weakened from lower prices as the old longs were. Put another way, when the supply of losers is exhausted, the downtrend ends. Now, it's really important to keep this definition in mind because one of the ways I really like open interest because it's fairly easy to understand. And prices are rallying, prices are going higher and higher. And if open interest is declining, that's a bearish sign because what it's essentially doing is showing you that there aren't any specific or there aren't enough people willing to buy at certain levels. If markets have been rallying for the past month or two, and if open interest is rallying with the markets and increasing while the markets are moving higher, that means that there are willing buyers and sellers at these higher prices. So that uptrend is still going to keep going. But when the markets are rallying and open interest is declining, it means there's not a lot of people interested in even buying any of this or even shorting it at all. So it's a good sign to stay away from a market like that. And for this specific trade, we'll take a look at the chart and you guys will actually get a chance to see how the markets were dropping and open interest was dropping as well, indicating that there weren't a lot of short sellers in the markets or people that were even going long. So it came to a choice where I had to choose. All right, what do I want to do? Seasonal tendencies are going to match, but what really sold me on the trade was the price action itself. Price was trading inside a weekly fair value gap, and we had an order block below equilibrium. So I'm anticipating for the markets to use this as support, and then we'll get new longs in the market. Longs that weren't as weakened from the lower prices as the old longs, which in turn would lead to higher prices within the next month or so. So before we actually talk more about this, let's actually take a look at the seasonal tendency chart itself. Alright, now here it is. Class 3 milk. So this is a 25 year seasonal tendency from 1995 to 2019. And I do want to get some updated versions of this too, for sure. Now, this right here, this is a spreadsheet of mine. I keep track of non-commercials, their longs and shorts, change in longs, and their net position. Every week, I constantly have to update these spreadsheets, but there's not a whole lot going on right now. But what I do really like seeing is the fact that they've been taking off some of their short positions. Earlier in November, they had 7,000 shorts, and then it dropped to 5,900, 5,600, 4,860, which is a good sign. And they have been increasing their longs. For this specific trade, I'm not that worried about whether the non-commercials are very bullish on this, because this is mainly based on a commercial bull market, which is what ICT talked about when it comes to a premium market. When commercials, big commercials, the guys that own practically everything, are willing to pay a premium for this stuff instead of waiting for the next month out, it shows that they're willing to take prices way higher. The non-commercials aren't on board right now because typically they always end up buying later. Let's actually take a look. Scroll. See, historically, these guys, they start adding their long positions at the end of the year. So we're currently in the 2nd of December. For this month, this was when I'm anticipating them to start adding some of their long positions. But I'm already in the trade because I'm anticipating it to be a commercial bull market. So whether the non-commercials are already very bullish on this is irrelevant at the time. But I really want to see for the next month, as I'm in the trade, I want to see their shorts decreasing and them to start increasing their longs heading into the next year, like they've done last year. So if you look at last December, they kept gradually increasing their longs, as the year went on. Let's see, all the way through February, March, April. That's what I want to see. I'm not sure if I'll be able to hold on to the trade idea for that long, but best bet, probably by the end of this month, I'll know whether or not I want to hold this trade or if it's something I want to bail on. But it's like a really good idea, and I'm ready in the trade. Stop losses in. There's not much to really worry about. And I don't want to spend too much time talking about this. If you guys really want to learn how to actually read the commercials and non-commercials and what they're doing with price, I strongly recommend checking out Kevin's YouTube channel. I mean, he's taught me a lot. I'm not that good at it to even attempt to explain it to you guys. I wouldn't be doing you justice. I know what I understand about it and what I don't. And for some reason, I understand I don't know enough to be teaching you guys how to put together the Commitment of Traders report or how to read it properly. It's not something I can articulate very well. But let's actually take a look at the charts when it comes to class 3 milk itself. We're going to select the commodity here, class 3 milk. And here's the premium market. So this is the nearby contract, January contract, and it's trading at $20.11. What's really important is the fact that the next month out contract is trading at $19.89. Usually in a regular market, in a carrying charge market, you typically see the nearby contract is worth less than the next out contract. But we're not seeing this here. There's the premium. And based on what I've seen with the sugar number 11, I mean, it was a violent move, man. That thing took off. I was hesitant to take this trade because I'm just getting used to understanding the premium markets and carrying charge markets like ICT thought it in core content this year. But I figured there's not much to lose. If I lose $2,000, so be it. But this is a good trade idea. But let's actually take a look at open interest. I think you guys might like this. It's actually my first time checking out the chart since I bought it. And I bought at $19.45. So I'm in profit, baby. I guess that's good. You can see here open interest is rising, but let's actually take a look at on the weekly before this. Show you. Yeah. When price was down here, the data has already changed, but when price was down here, trading in here, open interest was down nearly 50%. That thing was down here. Now it's changing very quickly, but open interest was dropping as this candle was down here, which to me was a really, really good sign, showing me the markets aren't really trying to go lower because there aren't that many, let's say, big players selling this thing. And instead, markets are dropping because a lot of profit taking from this move. That's what I was thinking initially. I told myself, chances are this is profit taking from this massive move here. This was a break in market structure. So I expected the retracement, and I lined up the fibs, and it was around 61% fib retracement level, and you can see it just tapped this bullish order block here. And sell side was already taken from this initial drop. So sell side liquidity was taken with this swing low. So we have this swing low in place. Price goes up, breaks market structure, retraces. Let's actually see if I can remember that. There was another thing I remember was using bar chart is so very weird to even do my charting, man. Alright, this is good enough. So you can see this a bit clearly now. Alright, so here's the breaking market structure. I hope you guys can see it. And here's the retracement. Come to think of it, I think I bought really good. Okay, $19.45. Oh wow, that's impressive. Yeah, just a man. I wonder how much I'm up. I would show you guys, but some of you might be too nosy. I'll probably show you guys eventually as the weeks goes on. But this trade, I mean, it has so much upside, especially with the markets closing at this, man. If I see another big move up, it'll pretty much solidify the trade idea. I'm not certain if I want to move my stop loss to break even if when it takes out this high. I see I has talked about this a lot when it comes to position trading and position trading management. Not to move our stop loss to break even too quickly, especially in these long term trades, because this actually is a long term trade. And in all likelihood, I'll try to hold on for as long as possible until this high is taken out, which would put me around 6 grand in profit or so. But right now, it's good so far. So we had a volume imbalance in here. I remember the chart I was looking at before, this wasn't filled. This drop was what filled this volume imbalance. But now looking at it, there's a candle that filled it in here. I'm a bit confused about that, but that's fine. And now open interest is going back up on the daily time frame. And it's doing so while the markets are going up, which is a good sign. If I see markets take out this high and an open interest is still rising, that's one of the best signs I could possibly hope for. I think that's about it for this chart. I can't really show you guys much since the market's already moving in my favor and open interest isn't looking as it was before. But before, man, open interest was it was terrible. It was down here. That's I was like, yeah, I'm definitely going to be buying this. But now since the markets are rallying again, it's going back to normal. But good trade idea overall. Some of you guys asked me what platform or broker I use for any of this. Don't really want to be touting any broker or anyone like that, but I specifically use AMP Futures. It's a discount futures account, and I really got into them because ICT mentioned them and he used them. So I figured, all right, I'll give him a try. And I used to use NinjaTrader, but NinjaTrader they charge 225 dollars for their data feed every quarter. I mean, I used them for like 2 quarters, but I didn't really see the value in it. They weren't even linked to TradingView, and I use TradingView every day, so it made no sense for me to be using NinjaTrader and paying such a premium for their data feed. I didn't really see the value. It's just regular futures, man. So why in the world am I paying so much money for it? But so I let them go and canceled, I guess, my subscription or membership with them. And now I use AMP Futures. I was a bit worried trying to find the right contract for AMP Futures to actually trade this, so I had to email them, and then I had to call support, and support the guy that was working there said he's never even heard of Class 3 milk. I had to really figure this thing out, and I got a hold of a manager, and they helped me out. But outside of that, it was quite the easy trade. I took it at the close of the day because I was very hesitant. As you know, these trades, they're a big commitment. I wasn't sure if I really wanted to risk that much of my live account on one trade idea. But everything lined up perfectly, and that's the best trade I could possibly ask for the end of the year. So trusting the trade, it was a process-based trading decision rather than an outcome based. So I didn't get in the trade in hopes of, yeah, I can make 7 grand from this trade, so I'm gonna take it. It was more of, okay, my seasonal tendencies line up, commitment of traders line up, open interest is definitely on point, and ultimately, these markets are in a premium market. And we know things are about to get a bit rougher next year, so it makes a whole lot of sense to go long in some of these asset classes that are tipping their hand that they may be bullish. So that was my process based decisions when it comes to taking this trade. I'm not advising you guys to take a trade like that. As you know, I pretty much the low. I didn't know it was going to be such a good entry, but um, so I'm not telling you guys to get in here because they could retrace and you guys could end up getting hurt. So just be careful. Pay attention to this stuff. I mean, if you want to get into trading commodities like I do, because I think I'm probably going to be moving into that direction for the next 3 to 5 years, taking more mega trades, 3 to 5 mega trades a year if I can find that. That way I can spend more of my time freely rather than having to wake up early in London and having to day trade. It's currently 4 a.m. It's 4:01 right now. It's like I'm not sure how long my body's going to let me do this. For now, yeah, I just turned 20, I think, November 29th. Yeah, so I'm 20 years old now. I can do this for a couple more years. Sure, I can drink my coffee every day. I can keep putting it on, but I understand. It's just I won't be able to do this for forever, especially just staying up from London till New York and then having class and then exams and then actually having a life outside of that. Yeah, it's gonna be a rough lifestyle. So I'm slowly trying to put myself in a position where I can trade less and wake up at London less. But for now, I'll be able to do it for the next probably 3 to 4 years or so. But once I get married and things like that, around 24, 25, yeah, I don't think my wife's gonna let me wake up at 3 a.m. every every day and looking at these markets and stuff like that. So it's a strategic approach of me to slowly move away from the London session type of stuff. But you don't have to do that if you know if you have the time and you have the health to do it. So this is it, guys. It's been a fun video, especially looking at my trades being in profit considering where I bought. I don't know the exact P&L, and I'm very tempted to check, and I will after this video. So I'm guessing probably around $700 or $1,000, maybe more probably, but we'll see. So with all that being said, have a good day, guys. Good trading, and do be careful because I think today is non-farm payroll, so I won't be trading. That's really why I was able to put this video together. I hope you guys enjoy it. Give me some feedback on what you think about the process-based decisions I've taken themselves. So the four core components of the trade, like open interest, COT report, seasonal tendency, premium markets, and the PD arrays in the markets lined up themselves. So there was a lot going on for the trade. So let me know what you guys think, if I missed anything, if there are any ways I could have added some confluences to help this trade be a bit better. So with all that being said, be safe and see you guys next week. Ooh, man, I'm tired. Yeah, see you guys next week.